Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, October 29th. We got quite a bit of economic news to go over today, so we'll jump right into it. We have the core PPI, which is the producer price index of the Fed. Fed watches this as an index for the wholesale inflationary number. So, and what the core is basically, it's where you strip out food and energy, which creates the volatility in there. So, with that said, we got last reporting back in August, we had a zero. So the forecast for the month of September was up 0.1, and it came in at forecast. So again, inflation's been showing very low numbers there. If you keep the food and energy in there, actually it was at a negative number. So there's obviously the food and energy created the volatility, which actually got reduced in that time period. But overall, when you take that out, we show a slight improvement in the inflation. Also, we got the retail sales where we're reporting the excluding autos numbers in there. So we had a 0.1% growth in the month of August, and for the forecast for September, it's supposed to be at 0.4%, and it came in at came in there. So, but when you add the autos in there, which creates a volatility, basically it was at a very low number, actually a negative, because there was not a whole lot of big ticket items buying. So people are buying, but just not the big ticket items out there. Then we got the Case-Shiller Home Price Index. This is the index to go over the 20 large cities in the U.S. And they showed a 23 or 12.3% year-over-year growth back in July. And for August, it came in up at 12.8%. So from August of 2012 to August 2013, it went up 12.8%. So good numbers right there. Obviously, people who own homes are like that. And then last but not least, I'm sorry, not last but not least, but we got the consumer confidence for the month of October, which had an 80.2 rating, which is a pretty good number. And it was supposed to come down there because obviously, remember, we had the government shutdown, so people weren't too thrilled, and it came in much lower than they anticipated. So it was a pretty big drop down to 71.2. Now, it will be kind of interesting to see if people forgive and forget as we go down the road, but again, we'll have to kind of wait and watch, see where consumer confidence goes in November and December. And last but not least, here we got the business inventories for the month of August. Now, this isn't a huge impactful one, but it kind of gives us some insight as to where businesses are if they're actually storing more inventory, where things are going. So the more they store, the more likelihood we're going to have the economy is going to be picking up. So at a 0.4% growth back in July, and we figured that was going to continue in August, and actually dropped a little bit. So inventory has dropped. So not a great sign where that's going. So something to continue to watch for. Now we'll jump over the headline news. Stocks ended the day actually up. Dow is actually up over 100 today. So good signs there. A lot of that had to do with not so much the data that was provided, but some of the other news reportings from a couple of companies out there, like some stock buybacks and stuff. And also we have the start of the Fed meetings, beginning the two-day meetings. So today they started those meetings, and then tomorrow they'll be giving their announcement. So we'll expect some volatility after 11:15 Pacific Standard Time tomorrow morning as Fed will give their statement. So let's go ahead and take a look, see what the bond market did today. We closed up. We are up 6 basis points, so 7 from where we left off yesterday. Now you have to really make a big impact on the pricing for interest rates, but obviously in a pattern here. But also notice how we're kind of going that sideways pattern for about the past week, and it's pretty much the market's not decided where they're going. Be very cautious here as we've kind of tapped that ceiling and bounced back a bit. This could create some resistance and push us back down a bit and bring us closer to where the 10-day moving average. But again, just be a little cautious here. We could be reaching the cap here where things are at. All right, folks, thanks for watching. Hope you guys have a great day. But as right now, no really big changes in the pricing for interest rates compared to yesterday. Have a great day.